The 88% haircut. Airtable just sold for $1.285 billion, wiping out 88% of its peak private valuation in a single signature. In 2021, venture capital threw money at an $11.7 billion valuation based on a narrative that no-code software was the future of work. Today, Bending Spoons bought their $480 million in annual recurring revenue for a 2.7 revenue multiple, picking over the bones of a zero-interest rate darling. But the real story is not the valuation collapse. It is the AI shift that gutted their core utility. The AI Obsolescence. Airtable built its business on putting a friendly, customizable interface over a relational database so non-technical teams could construct internal apps. That thesis worked perfectly when custom software required expensive engineers. Now, AI agents from Claude to Replit can generate a bespoke internal tool in plain English in seconds. The market for a specialized, overpriced no-code app builder collapsed the moment language models could write actual code on demand. This left Airtable as a high-priced database with slowing growth, which is exactly the profile that attracts Bending Spoons' aggressive Rollup Playbook. The Rollup Playbook. Bending Spoons is not buying a mission. They are executing a ruthless private equity tech rollup. Their proven playbook involves acquiring a widely used but struggling brand, firing the bulk of the original staff, migrating the product to their in-house European engineering team, and aggressively hiking prices on locked-in enterprise customers. They did exactly this to Evernote, streamlining bloated infrastructure while charging legacy users wildly higher subscription fees. Airtable's 500,000 organizations are just the next cohort of captive revenue. Which brings us to the structural financial reality this reveals for the rest of the software market. The signal under the noise. The Airtable buyout proves that the no-code software boom was a capital anomaly, and AI agents are forcing a brutal restructuring of the entire tier of former unicorns. By combining the obsolescence of manual app builders with a ruthless private equity extraction model, Bending Spoons just set the new baseline for distressed tech assets. If you are an enterprise operator paying a premium for workflow tools, prepare for massive price hikes. Your vendors are going to get swallowed by financial engineering firms looking to squeeze every drop of recurring revenue from locked-in teams. If you are an investor, the exit multiples for standard software are officially resetting from 20 down to 3. The era of building a venture-scale company around a slightly better user interface for a database is dead. The new wedge is autonomous workflow execution, where agents do the work rather than just giving employees a prettier place to type. Watch the enterprise pricing tiers on Airtable renewals over the next 2 quarters. That will confirm exactly how fast the extraction phase begins. Subscribe for more.